Let's get more on the markets and the prospect for more interest rate reductions. And we are joined by Barry Schwartz, partner and portfolio manager at Baskin Wealth Management. Barry, thank you very much indeed for joining us. What are your thoughts? I mean, no great surprise the rate cuts went through yesterday.
Yes, obviously no great surprise on both sides of the pond, interest rate cuts. We are in a global interest rate cut cycle right now, so we expect to see multiple rate cuts in both Canada and the U.S. In Canada, of course, we're seeing the potential for a recession. We're seeing the potential for a real slowdown in employment, as well as worries still about the tariffs. And of course, the inflation number that came out a couple of days ago below the 2% target. So there's no reason for the Bank of Canada to, to keep rates where they were. I think they were obviously waiting to see what the United States is going to do. It was consensus that the U.S. was going to start cutting rates. One thing that Canada wants to make sure is that our dollar doesn't go up too much, right? So the Canadian dollar, to everyone's surprise, has been much stronger year to date. And that's because the U.S. hasn't cut the rates and the worries about tariffs and what Trump's going to say next. And then in the U.S., of course, we're going to have expectation of another 50 basis point rate cut, 0.5% for the rest of the year. So 2 more cuts. And then we'll see what happens, how the economy plays out. If you listen to Powell, he's pretty much telling you the economy is slowly sinking in the U.S., and he can't worry about inflation at the moment. He needs to protect the employment situation. And quite frankly, a lot of the inflation in the U.S. are things that he can't control, whether that's auto insurance costs, healthcare costs. These are things that raising interest rates or cutting interest rates are going to do nothing for.
You are looking askance, I think we could say, at the massive spending on AI equipment. You say, for example, OpenAI has about $12 billion in US in revenue annually, but spends more than $100 billion a year. And you can only keep that kind of thing up so long.
Well, and if you talk to Oracle, I think it's going to owe Oracle over $300 billion for obligations that will come in the future, right? That's a lot of money, and that's why Oracle stock took off last week like a rocket ship. By the way, don't ask me why I sold Oracle for clients in 2019. Oh. But getting back on tangent, there's elements of speculation for sure in AI. There's elements of froth and bubble, but I think what people need to understand, and why I own a fair bit of the Mag 7, especially the hyperscalers, is that these guys are being very prudent with their cash flows. Most of them all of them have amazing core businesses that will still be used whether AI is a thing or not. And of course, the demands for cloud computing, whether AI becomes a thing or not, it clearly is, will still grow in the future. You know, still so many companies have lots of their data on premise, governments as well. And as technology improves and demands for data become even more ubiquitous, I think it's so great for Amazon and Microsoft and Google, etc. And finally, Apple, just the king. This is the company that's going to win no matter what. I saw the presentation last night with Meta's glasses. You know, those things seem a little bit creepy and weird to me. Do you want to be hanging out with the person who's wearing those Meta glasses and recording everything? Not me. I still think the phone is the best form factor and will be the leading product going forward. So, we're so happy and excited to own Apple for the long term.
I'm pretty excited, though, Barry. I mean, it would be amazing to walk down a street in a European city, for example, look at a building, and it tells you what it is immediately.
Oh, absolutely. There's amazing use cases. But let's keep in mind that Apple has billions and billions of customers that already trust them. You know, Meta's brand has taken many hits over the past, and Meta's failed spectacularly on many of its attempts, right? So if the glasses turn out to be a thing, Apple's going to be copying that real quick. And so I would expect more people to be wearing Apple glasses than Meta glasses, but we'll see.
And you're not in NVIDIA right now. You admit, of course, you missed some upside there. And say a name like Anthropic, you'd be wary of.
Well, we don't tend to buy non-publicly traded securities for our clients. Yeah. So we tend to stay away from speculate. It's very simple. I'm looking to own companies that are trading at reasonable valuations, generating enormous free cash flows on their core businesses, and I'm fine for them to reinvest into new exciting areas where the addressable markets can be massive. But what I don't want to invest in is companies that have no revenues, companies that are using debt or equity to fund their ambitions, companies that have huge growth opportunities, but nothing to show for it. I still think that people will gravitate to these big techs. They trust them, and of course, distribution matters. And as Amazon and Google and Microsoft roll out more AI features, I think customers and businesses will just gravitate more to their products. So. And the final thing is, like I said, the valuations of these stocks are not that expensive. These are the best businesses the world's ever seen. Apple, 28 times earnings, Meta, 26 times earnings, Google, 24 times earnings. They're still way too cheap given the distribution reach, the free cash flow that they're generating, and the potential for AI to be unbelievable.
Right. So as you said, you own all the so-called hyperscalers, Amazon, Google, Meta, and Microsoft. Give us the Canadian market. Are you seeing many opportunities right now?
Well, admittedly, we've been offside this year on the Canadian market. Gold has been the unbelievable performer this year. Gold did nothing from 1980 to 2010. It's had market performance from 2010 to 2025. Kudos to those that own gold over the last few years. It's been a rocket ship. But those that know our style, our investment, we like to buy companies that generate cash flows. We tend to stay away from commodities. And so we're going to miss runs like that in all different types of products. And it's okay. You don't have to catch everything. But in the Canadian market, of course, the strength we're seeing in financials, in the banks, Shopify, it's really good. But the bottom line is, not every company is participating. I read the other day that 40% of the S&P 500, about 200 stocks are down year to date. If you look at the Canadian market, some great quality companies, Constellation Software down, Couche-Tard down, Restaurant Brands down. These are companies that are reporting strong earnings, maybe facing some temporary problems, but terrific compounders over the long term. So I'm not chasing any of the things that I missed out, and I'm just looking for better opportunities in Canada and the United States.
Barry, thank you very much. Great hearing from you as ever.
See you soon, Andy. All the best.
Talk soon. Barry Schwartz, partner and portfolio manager at Baskin